Well, and welcome back to the Cryptoviser podcast. Ripple co-founder is under fire for moving 175 million XRP at near all-time record highs. Well. If you guys have been watching my video, none of this should be a surprise to you because we have talked about the fact that XRP selling will continue to accelerate. And most of that is going to be coming from the insiders. And we're going to be covering that in today's video, along with many other topics, including the end of the bull market. Are we there? Well, there's a lot going on here. This user on X, who we've covered before, the Pigeon with 58,000 followers, says the bull market started at $15,000 for Bitcoin. I'm sorry that you were not convinced, but that's not my problem. It's been 3 years. And this is something we're going to be discussing because the fact is we have been in a bull market for 3 years. And a lot of people are stating now, including a lot of YouTube and crypto influencers, that the bull market hasn't even begun yet. Where the hell have they been for the last 3 years? Meanwhile, Ethereum is going to hit $10,000 and tear the market a new according to Arthur Hayes. We have a lot to discuss. Make sure you guys are subscribed to the channel. We upload every single day right here talking about crypto, blockchain, and investing. Sometimes we do deep dives into individual cryptos or projects. And sometimes we do the macro, and that's what we're going to be talking about today, the macro environment in crypto. Are we at the end of the bull market? What's going on with Pump.Fund? What is Janet Yellen, the former Secretary of the Treasury, saying? What is Trump's business, World Liberty Finance, buying in the market? There's a lot to discuss, a lot to cover, and we're going to be doing that in today's video. So give the video a thumbs up. Let's get right into it, starting with Arthur Hayes. Now, you guys know Arthur Hayes, the founder of BitMEX Exchange. We listen to what he's saying. He has very good understanding of the macro environment of what's going on with the banks, with the markets, with the Federal Reserve, with the president, with the sentiment. And so when he talks, we listen. It doesn't necessarily mean we have to agree, but we listen. Anyway, in a new blog post by Arthur Hayes, he argues that the second biggest digital coin, Ethereum, could reach $10,000 by the end of this year. That's more than double the coin's all-time record high. Now, we know so far in the cycle where we are in the middle of 2025, Ethereum has not reached all-time record highs. Well, Arthur Hayes wrote, the coming Ethereum bull run is about to tear the market a new asshole. Ever since Solana rose from the FTX ashes from $7 to $280, Ethereum has been the most hated large cap crypto. I would agree. He also says Western institutional class believe that Ethereum is now the popular thing, right? We're seeing a lot of different companies getting into Ethereum, including the president's company, World Liberty Finance. Breaking news, World Liberty Finance has now purchased more Ethereum. So as you guys know, we've covered World Liberty Finance previously and their portfolio of crypto holdings. World Liberty Finance, backed by the Trumps, aims to strengthen the US dollar global status in the DeFi space. And this is their portfolio. Now you can see they are heavily invested were heavily invested in a lot of DeFi protocols, a lot of Ethereum layer 2s or Ethereum adjacent chains, and Ethereum directly. Currently, when I'm recording this video, they have $255 million invested in Ethereum, and these are from recent purchases. You can see here, in the end of July, there were multiple purchases for Ethereum. The first one started basically in the middle of July with 10,000 Ethereum purchased. Then they purchased an additional 6,000 and then an additional 3,400 Ethereum, bringing their total to about, where is the holdings right here? 73,616 Ether worth $274 million, right? I actually think this is more than what Dr. Evil asked for in those movies. Anyway, you can also see that they're invested very little in Athena, in Ondo, in Tron. We know that Tron and Justin Sun is very close with the Trump family at this point. And then you can see some stable coins and other small investments in the low multi-million-dollar ranges. And so, yeah, I kind of agree with what Arthur Hayes is saying here, right? We are, I think, due for this rotation out of Bitcoin into Ethereum, as we've been discussing. And what we're going to be doing a little bit later in this video is talking a little bit more in depth about this rotation out of Bitcoin and how it is going to impact the market and what we are actually going to see occurring. But before we go there, FTX to begin $1.9 billion payouts in September as claims are no longer disputed. This is something very interesting, and it's going to go along with my thesis about where we are going in the market in the second half of 2025. And we'll get there, but let's first understand what's happening with FTX. They've scheduled the next distribution for creditors using funds no longer classified as disputed claims. The FTX Recovery Trust announced that the next distribution is expected to start on September 30th. They will determine eligible claim holders based on record date of August 15th. The upcoming distribution will mark the third round of repayments following a $1.2 billion distribution in February and $5 billion announced in May. The new repayment comes after the bankruptcy court allowed FTX to reduce the disputed claim reserve from $6.5 billion to $4.3 billion, releasing about $1.9 billion in cash to be distributed to the allowed claims. Well. So here's the deal, guys, right? We are now approaching August and September of 2025. And in my view, what we are going to see is a rotation into the alt season. Now, again, I could be wrong on this. These are just my opinions. Make sure you guys do your own research, but do me a favor and at least give the video a free thumbs up. And if you think that this content is worth at least $1.99 per month, click the join button or subscribe plus button down below to learn more about becoming a channel member right here on the Cryptoviser podcast. But as we can see from this chart, we are literally at all-time record highs, and we have influencers and YouTubers out here saying the bull market hasn't even started. Clearly, these people should not even be, they shouldn't even be listened to at all because they don't know what the hell they're talking about. But at the end of the day, this is setting us up for a 1 to 2 month rotation into altcoins, or potentially just a downtrend in the overall market, which could also be a potential, including Ethereum and including the altcoins. But as this money is re-released into the ecosystem in the end of September, leading up to the point of the cycle where most people think it's going to top out, right? I could be wrong in my top calls at the middle of the year. And we could be going higher into the end of 2025. And this would go in a lot of the Bulls thesis. And so if you have $2 billion of additional retail money entering the space at the end of September, that could set up October to be buying season into November, which could push us up to new all-time record highs across the board. So this is something to definitely keep an eye on. But I want you guys to remember, there is a lot of selling going on. There is a lot of exit liquidity that is being taken. This guy, the DeFi villain on X, said if you wanted to know how to exit a $650 million position in Ethereum, this is how you do it. And he's talking about the new Ethereum strategy company called Ether Machine, which is Pantera backed. And they're raising $1.5 billion for an Ethereum company to use $800 million to buy Ethereum. The largest all-common stock financing committed at announcement since 2021, anchored by a contribution of approximately $645 million, or about 170,000 Ethereum, from Andrew Keys, alongside an upsized common stock in excess of $800 million. But basically, this guy, Andrew Keys, is handing over $170,000 and getting cash for $650 million. And so, like I said before, right, the 80,000 Bitcoin whale that unlocked 80,000 Bitcoin from, Satoshi era wallets back, or a decade ago, people were like, oh no, Cryptoviser, there's no way that they're going to be selling this 80,000 Bitcoin. It's like, then why did they move the coins? Just to move the coins in the top of the market? No, they're moving the coins because we are at the top of the market and they want to exit. And the exit liquidity is still available. The exit liquidity is all the buying in the market. And so now you have all these Ethereum treasury companies that are essentially saying, we want to buy Ethereum. And they want to buy large quantities of Ethereum. So these are usually done through private sales, not on the open market, right? So these early investors, people who got maybe Ethereum under $1, they don't care if Ethereum goes to 20,000 or it, it's going to, stay around where it is under $5,000, because at the end of the day, if it goes up to $20,000 or $100,000, there may not be liquidity for them to exit the position, because there's going to be so much other sell pressure as well. So this is guaranteed money. This is an exit position for the big mega whales. Same thing has been going on in Bitcoin. This, I think, is why part of the reason why MicroStrategy won't release proof of reserves, because they don't want us to see where all the Bitcoin are coming from. But meanwhile, Andrew Keys said on CNBC, "I don't own Bitcoin. I'd rather have an iPhone than a landline. Ethereum has 50x to Bitcoin over the last decade." Let's listen to what Andrew Keys said here on CNBC in the past couple of weeks.
So you're an Ethereum guy. Do you own Bitcoin?
I'm not. I do not own Bitcoin.
None.
I'd rather have an iPhone than a landline.
Ooh, that's like a sick burn, the kids might say. But
he's been waiting to say that for years, you can tell.
The sick burn is that Bitcoin has done a lot better than Ethereum over the last decade.
That's wrong. Ethereum has 50x Bitcoin over the last decade. If the price of Ether per Bitcoin over the last decade is materially improved. If over the last decade, since Ethereum started, you would be 50x wealthier had you owned Ether.
Because it doesn't include the previous 10 years. You're talking about just the last 10.
Since inception of Ether.
No, I know.
So since the Genesis block of Ethereum, if you
go from the original price of Ether to where it is now and go back to 50 cents for Bitcoin to where it is now.
Well, that's not the last 10 years.
That's what I said. It's not just...
So we can go back to maybe the origin.
The only time you could have it was since the origination of Ethereum.
Right.
It's materially outperformed.
So you're in a...
Well, I don't know what he's trying to get at, because I don't even think that the CNBC hosts believe that, because Bitcoin went from zero to over $100,000. Ethereum hasn't. But maybe he's saying since the genesis of Ethereum, it's outperformed, which is possible. I'm not really sure. I'm not going to do the math. It doesn't really matter. The point is, he's an Ethereum maximalist, right? But the bottom line here is Ethereum is being bought up, but it's also being sold. He is so bullish on Ethereum, he's selling $650 million of it. But you're so bullish, you're never going to sell, right? Guys, pay attention to what the hell is going on in crypto right now. And I know most of you guys on this channel do. Most of my viewers are very well in tune with my thesis and my analysis of the market, whether you agree with it or not. That's a whole different story. But a lot of what we talk about ends up occurring in the market, right? A lot of our predictions end up actually playing out, and we're able to identify these things because we are looking at all the different signals and sentiments of the market, right? Especially what people are looking at versus what they're not looking at, right? When everybody's talking about MicroStrategy and Bitcoin, the play is over. When everybody's talking about Ethereum, the play is over. What is nobody talking about? Polygon, a lot of the other layer twos, Arbitrum included. Meanwhile, Polygon is now having B token, which is becoming Spain's first regulated and on-chain security token offering. So it's called B token. It says you'll be able to access part of the Biself brand story and become the first investor with tokenized shares in Spain. So what in the Polygon is going on here? Well, Europe just crossed a major threshold. Equity in European registered operating companies being issued and traded entirely on-chain. B token represents legally recognized shares of Biself Brands, the Spanish digital native company behind the portfolio of wellness and lifestyle brands, with all the equity issuance, compliance, and settlements seamlessly powered by Polygon. Not a testnet pilot, not a regulatory sandbox. This is live today. And by the way, the Polygon founder just found out about this. And this is true adoption of the technology. When it's being back-end integrated into these larger products, and you don't even need to go to the founder or any of the developers to actually deploy this kind of capability and technology. You just need, engineers and smart people to do it. That is the future of these decentralized rails and that have the ability to do this. I think a lot of that also is what we're seeing with Robinhood and Arbitrum as well. But again, nobody's talking about this in the mainstream because everybody's like, focus on SWI, focus on Bitcoin, focus on MicroStrategy, focus on XRP. Meanwhile, nobody's paying attention to the rest of the market. All these coins that everybody's telling you to focus on, SWI, Solana, XRP, these have already pumped. They have already pumped significantly. Can they go higher? Of course they can. But are we looking for coins that have already pumped, or are we looking for coins that are getting ready to pump? You tell me. Anyway, but B token is the first security token offering in Spain to be officially recognized under the current law, fully operational in accordance with Spain's regulatory oversight. The token represents real shares, not abstracted claims or proxy instruments, and delivers economic governance rights to the token holders, dividends, voting power, and a voice in corporate shareholder meetings. This is real adoption that is going to hopefully be on chain for quite a while and really power the back end of these blockchains. This is what we want to see, and this is what we are seeing with Polygon, with Arbitrum, and meanwhile, nobody's talking about it because look at SWI, look at SWI, look at SWI. And what is going on in SWI? If you think, this is the same thing that I would say about Solana in the previous cycle, because it's literally the same thing. Think about the first 3 letters of SWI and then add a few more letters. Guys, the insiders are 100% selling. 100%. And if you don't think they are, they're doing it on Ethereum. The insiders are selling. Bitcoin, the insiders are selling. And who else is selling? Well, XRP, and we're going to get to that in a minute. But before we go there, what else is going on? Pump Fund private sale investors send over $160 million to exchanges. Whales have sent over $160 million in Pump.Fund tokens to exchanges at Pump drops below their ICO price, triggering fears of a broader meme market correction. No, guys, Pump Fund was a coin from the beginning. There's no... I mean, guys, I can't even get upset about this because I know most of you guys are not investing in meme coins the way that Pump.Fund investors are investing. I mean, this is complete and utter top market signals. 100%. It is a top market signal. We're also hearing an amended class action lawsuit calls Pump.Fund a slot machine cabinet with $5.5 billion in this lawsuit. An amended lawsuit accused Pump.Fund and key Solana partners of operating an unlicensed digital casino that funneled billions through deceptive meme coin schemes. Whoa. And again, by the way, I don't really care about all the details of this because we're not really invested in these things, but this is an indication that this whole, like everything that has been built up on these meme coins is starting to collapse. And because meme coins were such a big part of this bull run, along with everything else we're going to be talking about in this video, right? The XRP sales, the issue that MicroStrategy is having now, this is an indicator that we have potentially topped out, even if it's just a local top. The lawsuit named Pump.Fund's operators, including the developers, the parent company, and infrastructure partners, including Solana Labs, the Solana Foundation, Jito Labs, and the Jito Foundation, as the people that they are suing. The case accused them of engaging in coordinated enterprise functionality similar to an unlicensed casino, relying on volatility and hype rather than disclosures or investor safeguards. The structure, they said, mimics a rigged slot machine where the first few players win by dumping their tokens on later ones. There's no underlying project, product, or revenue, only fast-moving cycles of buying, dumping, and collapse. Yeah, that is what meme coins are about. And here's the deal. My viewpoint is, and this is generally speaking for investing, I believe that you should be able to invest in anything that you want, right? I don't think that we should have regulatory agencies saying, well, you can't invest in this unless you have $3 million. You can't invest in this unless you're already rich. You can't invest in this for 6 more months, or whatever the situation is. But I also believe that it is part of your responsibility to know what you're investing in, right? It's the same thing like if you go to the store and take out your paycheck and just put it into the lottery. You're allowed to do that, you should know you're probably not going to win anything, but people still do it. And so what is the difference here, right? Are there promises being made? Yeah. Are there projects saying that they're going to be doing this and that and this and that? Yeah. I mean, we literally had a Hawk-Tua coin, right? Think about what that means, Hawk-Tua. And people said, oh, wow, this is going to change the world. It's like, what? It is not going to change the world. We have other projects that haven't done anything in terms of deployment of actual technologies that pretty much every other blockchain has, that are now launching other tokens or other projects. These are literally meant as pump and dumps, as pump.fun is. And so what happened with the pump.fun coin? Collapse. And again, this is another indicator, end of the cycle. Maximum extraction. They could no longer extract money from you from selling meme coins. So now they go to the next best thing, sell their own coin, pump.fun coin. This is going to change the world. Based on what? Like the Hyperliquid coin. Why is Hyperliquid coin in the top 10, top 15 cryptos in the world? It doesn't need to be. It's a DEX. Hyperliquid is a DEX. Why does it need a coin? And why does that coin have value? Higher than most cryptos like Polygon with higher fundamentals. Again, we are at the point in the cycle where the fundamentals are detached from where the market is. And so the market is pumping, not based on fundamentals, but based on hype and based on excitement and based on people wanting to get rich on the Hawk-Tua coin and every other celebrity coin that there is. And this is why I've said Solana is built up on a puff of air. The puff of air is meme coins, because Solana has not really delivered any other revolutionary or breakthrough capabilities this cycle. I mean, really the only narrative for Solana this cycle has been meme coins. And by the way, how do we know that? Well, in January, when the meme coin fiasco was ending, Solana revenue for their validators went down 97%. That is a precipitous drop. And so, again, we are at end stages of the cycle, and this is where we are going to start to see collapses, right? Whether Pump Fund collapses or not, I mean, it's already collapsing. You can see the price, but everything that's built on or built under it, right? Because Pump.Fund is built on top of Solana and all that. So now we're going to start to see, like, what is Solana's fundamentals? Like, what is Wall Street really excited about for Solana? It's a question we got to ask. It's definitely a question we got to ask. So there's a lot of Pump.Fund craziness going on, and a lot of lawsuits getting thrown around, and these are indicators of end of cycle. And that brings us to XRP dumping. Now, I have said literally for years, I'm probably one of the only YouTubers out here that has been very consistent on XRP and Ripple. First of all, I always say, never sleep on the XRP community. They are, everything that they said would occur with XRP has occurred. And that is something that we have to really respect, right? And the fact that Ripple is so connected with the XRP community is also very important. But there's a key piece that's missing, and that is how Ripple is going to increase the value of XRP and what Ripple is going to do with XRP. And this is a perfect example of what I have been warning about and warning about and warning about. And the XRP community keeps saying, not a big problem, Cryptoviser. This is totally fine. It's not. Ripple co-founders under fire for moving $175 million of XRP near the all-time high, sparking accusations of dumping tokens. Yes, that is exactly what he's doing. He did this in the previous cycle, and he's going to do it in the next cycle. And anybody who is like, well, he shouldn't do that. Why? You can sell your coins. Ripple can sell their coins. Why can't he sell his coins? I don't even think he's involved in the project anymore. I think he went on to build out XLM, which is why I was also very bullish on XLM, because I was like, if he's dumping his XRP coins, what do you think he's doing? He's like kind of keeping XRP suppressed so that XLM can catch up. Now, XLM is a whole different story. We're not going to get into it in today's video, but effectively, a wallet tied to Ripple co-founder moved 50 million XRP worth around $175 million, sparking backlash from the crypto community. One blockchain sleuth flagged the transactions, noting that roughly $140 million of XRP was sent to centralized exchanges. The transfer to exchanges are usually interpreted as a cash out. Yeah, that's exactly what he's doing. But there's nothing, for me, there's nothing wrong with this, right? He's been holding these coins for a decade, and he's entitled to these coins. Just like if you were a founder of a project, you're entitled to the coins. I am somebody who firmly believes, especially if you see these on-chain transactions and use common sense to understand, like, they're not just holding these coins to just hold them. I mean, Vitalik sold his coins. Charles Hoskinson sold his coins. Ethereum, I already said Vitalik. Charlie Lee sold his coins. Ripple sells their coins, and they say they're going to continue to sell it. And so, yeah, the XRP pump is over, because this is another example. Once they approve the XRP ETFs, if they do, which I think they will, it's over. It's over, because here's the deal, guys. All the XRP they're going to be buying is going to be coming from Ripple or Chris Larsen directly, because Ripple said they're going to sell their coins. And by the way, they still have almost 36 billion coins, 36% of the entire supply. And they can sell up to 1 billion per month. And they've said they're not going to stop. And they don't think there's anything wrong with that. And so what is the big uproar? What is the big concern? Because he's actually selling his coins? Because he's actually taking action in the market? Because he's actually listening to what the Cryptoviser is saying? By the way, I don't really think Chris Larsen listens to the Cryptoviser. Maybe he does. But I think that it's important to understand that there is selling. 80,000 Bitcoin whale? No, he's not selling those 80,000 Bitcoin. He did. Oh no, Ripple's not going to sell their coins. They are. Oh, Ripple co-founder's not going to sell his coins. He is. And we can keep going on and on. Oh, Ethereum whales are not going to sell their coins. They did. So that's where we're at in the cycle, where there's clear selling going on, and people are in complete and utter denial that there is selling going on, which is like, what? This is an opportunity, because when the market is greedy, you are fearful. And when the market is fearful, you are greedy. And going back to the beginning of this video, the bull market started 3 years ago. So anybody saying to you, the bull market hasn't even begun, or it's just about to begin, or we haven't had alt season, they're lying or misinformed or just have no idea what they're talking about. The bull market's been going on for 3 years, and we were bullish for 3 years. Now we're starting to turn bearish, which is the right thing to do. Whether we top out in August, September, October, November, or December, it doesn't matter. Maybe we'll go into an extended cycle in 2026. Taking profits is never a bad decision. Meanwhile, we're hearing from Janet Yellen, the former Treasury Secretary, that they're worried not only about crypto, but they're worried about inflation. QE Infinity on X said, how ridiculous is it to see the king and queen of inflation warn us about it? Ben Bernanke, or nicknamed Ben QE Quantitative Easing Bernanke, should go crawl into a hole and never come out. And we have Janet Yellen on TV saying that she has concerns about recent Bitcoin and crypto legislation. Well, sorry, you may be the only grandma that is actually worried about it, because most people at her age don't even know what crypto is. But here's the deal. She may be concerned about the legislation, but clearly Congress is not. I'm not. You're not, right? Because if we really think about what the Treasury did in the previous administration, is they de-dollarized other countries. They got countries to stop using the dollar by sanctioning other countries that countries do business with. And they thought, oh, they're just not going to do business with them anymore, which is completely ridiculous to think, because they're still doing business with them today. They're just doing it in other currencies. And one of the things the president has said is the dollar needs to maintain its reserve status. And I agree, guys. You may not agree with the president, you may not agree with the Treasury, but if the dollar loses reserve status, your life as an American is going to change, even if you're not an American, even if you're a European, your life is going to change so drastically in such a negative way. This is why Bitcoin maxis are converting completely into Bitcoin, because they think that de-dollarization is inevitable, that it's underway, and there's no reversing it. And what we saw over the last 4 years was an acceleration of the de-dollarization, which I didn't think that we were actually going to see, but it occurred. And so let's listen to what Janet Yellen says about her concerns about the recent crypto legislation, right? Again, remember, her and Gary Gensler were tag teaming, giving no clarity, no direction, no approvals, no guidance to anybody in the industry. They were just suing people, cutting off their bank accounts, cutting off their access to the dollar. And it caused a lot of backlash. And I think it actually hurt the dollar and hurt the U.S. more than it helped. And to reverse that, it's going to take a lot. And I think it's going to take a lot more than most people think. But let's listen to what Janet Yellen says here.
Ask you two other quick questions. We've talked for many years, Secretary, about crypto. I think you have been a critic, or at least a skeptic, and we have watched crypto just explode. Obviously, the Genius Act just passing last week. What do you think now?
Well, I have concerns about some of the legislation that was passed. I convened, I believe it was in 2022, the president's working group on financial markets to make recommendations about the appropriate regulation of stable coins. And I'm pleased to see that Congress did take up that topic and that a framework has been put in place. But unfortunately, I think it contains significant weaknesses. And so it's not all that I would have wanted to see. And that does give me concerns about what the role of stable coins, for example, will be going forward, whether or not there are adequate controls in place. And I believe they present financial stability risks that should be addressed.
Well, first of all, the Federal Reserve Chairman said that's not going to happen. The current Treasury Secretary said that's not going to happen. I personally don't. I mean, there's already financial stability risks by de-dollarizing other countries. There's already financial risks in printing more money and not cutting the deficit. And to be honest, you know, they got this crypto legislation passed within 6 months of the president taking office. She just said they were in a presidential working group since 2022. So they had 2.5 years to get it together and they didn't. They didn't. And she didn't push for it. And so, again, this goes back to, are you going to do something about it or are you not going to do something? Gary, for 4 years, said, oh, no, well, I can't really answer the question of Ethereum as a security not, because we would have to really do a full comprehensive analysis. Like, but didn't you just do that? Yeah, but I can't really, get into whether one specific crypto is or is not a security. It's like, isn't that your job? Yeah, but because Ethereum is very unique, and it's like he would just not answer. 4 years, he would not answer the question. And so now you have the complete opposite, SEC, and people are like freaking out. And it's like, what did you think was going to occur? Like a new SEC chairman was just going to come in and just be like, let's just continue this, like not answering whether ETH is a security or not. No, they're moving on. So yeah. Anyway, moving right along, we're now also hearing JP Morgan is exploring crypto-backed loans amid the stable coin push. So again, Janet Yellen is saying, oh, no, no, you can't do that, right? Meanwhile, JP Morgan, the largest bank in the United States, is involved. And they're getting more heavily involved. I don't know if it's a good thing or bad thing. It just is what it is, right? Meanwhile, in the Bitcoin space, and this is very important to keep in mind because Bitcoin moves the market. Yes, we may have an altcoin season even if Bitcoin drops, but the initial drops and fear could translate into the rest of crypto, and we could see massive drawdowns. Meanwhile, what are we seeing now? Again, end stages of the bull market. Bitcoin miner Marathon Digital is going to raise $850 million for $850 million to buy more Bitcoin and for other purposes. Jim Chanos says, so the management team that couldn't mine Bitcoin as a profitable business proposition is now simply going to buy it with your money? Marathon. And that's true, guys. I mean, the Bitcoin, we've discussed this over and over and over, and I think most of you get it. The companies that are doing this now late stage, the price of the stock is going to collapse when Bitcoin draws down. When it draws down, I don't know. But when it does, and it will, these crypto proxy stocks or Bitcoin proxy stocks like Marathon Digital that's buying at all-time record highs, taking out debt, selling shares to then go and buy more Bitcoin, they're doing it with your money. Keep that in mind. They're a Bitcoin miner. Their job is to mine Bitcoin. They're not selling the Bitcoin that they've mined at the top of the market. They're buying Bitcoin at the top of the market. How is this any different than the previous cycle? In 2021, at the top of the market, the Bitcoin mining companies were buying, prepaying for, and pre-ordering Bitcoin mining machines that were then delivered a year later in 2022 in the depths of the bear market when energy was higher and the Bitcoin price was lower. And so they lost in 3 areas. All the Bitcoin mining companies that did this, and some went bankrupt. Core Scientific went bankrupt. TerraWolf went through a restructuring because they all did this. They paid exorbitant fees for these Bitcoin miners, paid it in advance, got them delivered in a bear market. So they're going to be mining less from a dollar perspective. The cost of energy was higher, and the machines, by the time they were delivered, were already old. So that's a triple whammy there. And a lot of the companies did really terrible in the bear market. And this is another signal of which ones are going to do good and which ones are going to do bad. By the way, I do think that this is part of the reason that we're starting to see the Bitcoin mining companies like Bit Digital, BTCS, changing their entire thesis around their business and moving into Ethereum. I mean, it should be so clear to you. They're pivoting. And so we have some companies that are pivoting to Ethereum, which I think is smarter than doing this. And we have companies that are buying more Bitcoin with debt at the all-time record highs. And so long term, this is an excellent plan, and it will work out for Marathon Digital. I believe that. I even believe it for all the Bitcoin treasury companies, if they can last over the long term. But going into a bear market where there's going to be massive devaluations, and I'm not saying it's going to happen immediately, but it's something to keep an eye on, right? You should have a little note, like a notebook or something. Stocks to look at in December, stocks to look at in March, stocks to look at in June. I have a whole list on my desk of stocks and when I want to look at them. Okay, so I'll give you for instance, on one of my notes, I have December, Circle Unlock, right? Because so Circle, the USDC issuer, all their IPO shares are locked for 6 months. Once the 6 months is up, these IPO investors, that by the way, the IPO price was $30 and Circle went up to $300, so 10x. None of these early investors can sell yet. But in December, they'll be able to sell. So if we're at 10x or higher or around 10x of what the IPO price is, you don't think there's going to be a lot of selling? I do. So I'm keeping that on my list to prepare so that would happen. Marathon Digital. This is one that I should probably add to my list for maybe same time frame, maybe December, maybe January. And so I see what's going on in Bitcoin. And once Bitcoin starts to decline, right, or starts to show signals of rotation into bear market, this could be a situation where you buy puts or you short it or just kind of monitor it, right? I'm not telling you what to do. I'm not telling you what I'm doing because I don't know what I'm doing yet. I'm just saying maybe write it down. So that way you don't forget. Circle unlocks December. Marathon Digital, buying all this extra debt. When do you think the bear market is going to, or when the rotation is going to begin? Because you have time, right? I mean, we're not going to see, you may see prices drops precipitously, but they usually recover fairly quick. Usually declines into bear markets are like gradual 3 to 6 month timeframes of downward moves. So you do have a little bit of time, but you have to know the time frames. And so this is a risk, and I don't think a lot of people are looking at it. But meanwhile, MicroStrategy, where is that going? You guys know, for the most part, I'm fairly bearish on MicroStrategy for many different reasons. This user on X, economist with 20 plus years experience, he says MicroStrategy is retesting of the breakout. Price target $543. Now, when I'm recording this video, the price of MicroStrategy is around $415 with an MNAV of 1.78, meaning the MicroStrategy price is much higher than the underlying Bitcoin. Now, does this mean anything? No. But typically in rotation periods, from bull to bear or bear to bull, you start to see the MNAV of many of these different products, whether they're in premium or discount, invert to the other direction. We saw this in grayscale products in 2020. We don't really see that as much now because a lot of these Bitcoin products are ETFs now. But if they're not an ETF like MicroStrategy, they're not trading at the MNAV. And so this is where there's an arbitrage opportunity. Because let's just say, right, when I'm recording this, Bitcoin is about $120,000. So let's say Bitcoin drops in half, okay? So if Bitcoin drops in half, let's say less than half, let's say 120 and we subtract 40%, okay? I don't know why I said 48,000. So it brings us to $72,000. And that's basically what MicroStrategy's dollar cost average is, right? But let's say the price of Bitcoin drops to $72,000, right? That's a 40% drop in the price. So if we do a 40% drop in the price of the stock, that would bring us to $250. But because there's a premium here, you may actually see the price of MicroStrategy go down even lower than 247, than that just 40% drop. Because the MNAV, right, the net asset value of the underlying Bitcoin, may get compressed during that time. So in Bitcoin, you may see a 40% drop. But because MicroStrategy's dollar cost average is $72,000, and that's what the price of the drop would be, there could be fear, and that could drive more and more people to sell, and an accelerated sell-off and a compression of the MNAV. And that could put the price of MicroStrategy much, much lower than this, maybe 150, maybe 100. And so this is going to be a great opportunity on both ends, right? Selling or shorting or buying puts, but also buying the dips. Because when the MNAV is compressed in a bear market, that's going to be the time to buy. Now it's clearly a time to sell, right? And so to think that we're going to get to $543, I don't know, because if you've been following MicroStrategy, they're having more and more of a hard time getting money from their debt products versus selling their shares. And they don't want to sell shares because that also pushes the price down. Meanwhile, we're starting to see people asking AI what AI thinks. And by the way, you guys have to be really careful with this because I've used AI and Grok and stuff like this for analysis of different stocks. And a lot of times, like, I'm having to correct the AI. I'm like, wait, you're saying that this is the top pick, but what about this stock? Or what about these risk factors? And then boom, they come up with a different response. So you guys also have to be very careful with that. And by the way, if you ask AI a question and I ask AI the same question, will we get the same answer or we get different answers? You also have to think about that. So it says Grok selects MicroStrategy as a top pick. By the way, all-time record highs in Bitcoin, massive amounts of debt. It says the reason is MicroStrategy has the highest probability of continuing to rise from its current price of $430 as it trades well above the estimated 21-day moving average, supported by robust momentum and strong crypto-related catalysts. The company's Bitcoin holdings tie its performance to the Bitcoin rally, amplified by pro-crypto policies and high trading volume. The 21-day moving average should act as support around 400 to 410 during pullbacks, and technical analysis projects an upside target of $525. Well, we'll see about that, because keep in mind, now we're also hearing MicroStrategy is announcing a new public offering of 5 million shares of another debt product called Stark. So now they have Stride, Strike, Strife, Stark, and I think they have one more. I don't know. I'm losing track of all this debt that they have. But let's kind of understand a little bit more about this. I think I have another tweet. I guess I didn't pull it up. Yeah, here it is. So in this tweet, we can see here that it kind of shows us the difference. I think you guys can see this. It may be a little bit small or distorted, but you can pretty much see it. So effectively, the top is dividend rate. So it's Stark, you're getting 8% fixed annual. Strife, you're getting 10% fixed annual. Compounds if it's not paid. Stride, you're getting 10% fixed annual non-cumulative. And then Stark, which is the new one, is variable. It's initially 9% monthly and compounds monthly if unpaid. So there's a potential, keep in mind, there is a potential that in a bear market, they're not going to be able to pay the dividends. But some of these are cumulative dividends, meaning they compound the dividends if it's not paid. So it's still owed. And then at some point in the future, then they can pay it out. There's a lot of differences to what's going on here in the individual products here. And by the way, they changed the product, one of the products, and now they're facing a lawsuit over the preferred stock offering. MicroStrategy disclosed that a class action lawsuit was filed against the company and its board of directors. The suit alleges violations of the corporate law and claims a breach of fiduciary duty by the board. According to an analysis, the plaintiff is seeking represent holders of MicroStrategy's common stock. It claims that common stockholders were entitled to vote on a certificate of amendment related to the company's 8% perpetual strike preferred stock. According to the filing, the amendment, right, they changed the terms of this product, MicroStrategy. According to the filing, the amendment modified certain terms of strike preferred stock, including changes so that the liquidation preference per share approximates its trading price, subject to a floor of $100. The complaint seeks a court order declaring that MicroStrategy violated this section, that the board breached its fiduciary duties, and requests for the amendment to be deemed ineffective. Whoa. So again, another lawsuit, another long-term kind of drawn-out process to effectively extract money from these companies, right? So we saw it with Pump Fund. We're now seeing it with MicroStrategy. We're going to see this a lot more. But these are end stages of the bull market because they're suing before anything is even realized. And the other issue is, as these lawsuits come out, right, people are like, wait. First of all, it tells me that people are questioning what's going on here, right? I just recently listened to, I think it was a Spaces or a YouTube video where they were discussing the changes in the offering. And I was like, I didn't even know that they changed the offering. A lot of people didn't. And a lot of people are questioning why the offering was changed. And they're wondering if there's going to be other changes as well. And they're also worried that it was changed because Michael Saylor may have a very high amount of voting power. And if he does have a high amount of voting power, there's a potential that some of these debt products are Michael Saylor personal investments as well. I mean, that's possible. But the issue is that once you start questioning the validity of the product and the process, people lose faith in the whole ecosystem. Pump.fun. We're going to see an issue with Solana because of the issues in Pump.fun, because most of Solana is Pump.fun, is the meme coins. Most of MicroStrategy is these debt offerings. So if there's questions about voting power, questions about changing the terms without notifying the shareholders or being fully transparent, they already are having issues raising money in these debt offerings. And so if there's questions, it's going to make it even harder. And then they're stuck with selling shares on the market. And so if nobody's interested in these products, nobody's going to be interested in MicroStrategy shares. And that creates the opposite of the flywheel effect, where they are not able to raise enough. They can't buy as much as they want in terms of Bitcoin. The stock price, they have to sell their shares on the open market, so that pushes the price down. Plus, in a downtrending market for Bitcoin, which is most of what MicroStrategy is, in my view, MicroStrategy could go higher. Maybe it's going to even go to this $500 price target. But I'm still bearish. I'm still bearish. I don't think that this narrative of MicroStrategy is holding up any longer. At least at this point in the cycle, right? They've been talking about it for years. Oh, these companies are going to come on board. They're going to do the same thing MicroStrategy is doing. They're not, right? GameStop bought 500 million, and everybody thought they were going to buy 5 billion. And then people got pissed that they didn't buy 5 billion. Well, they're not all MicroStrategy. And I think that that's smart to have risk management in play, which a lot of these companies are not doing. And so it's going to be really interesting to see how this all goes, because Michael Saylor is saying Bitcoin can drop to $30,000 and Strategy could still pay its debts for decades. Well, he's saying it, but I don't know if it is actually, if it would play out that way, right? Because we don't know. I mean, if Bitcoin goes to 30,000, the price of MicroStrategy can drop even further, as we already explained. And so then how are they going to keep buying Bitcoin? How are they going to keep raising money to pay the dividends and pay the debt? Let's listen to what he says.
In our appendix, we've offered a review of our debt coverage. And as you can see, we've got a substantial stack of hard assets that covers our existing debt obligations. It's 14 times debt coverage right now.
At the current prices of Bitcoin. But if Bitcoin drops, then what?
We've got a review of our dividend coverage. We've got 180 years worth of preferred dividends covered with hard assets. And even if we had a 75% decline in BTC, we'd still have 26 years of dividend coverage. We've got a review of our dividend obligations and how are we going to pay these cash dividends with our ATM. And you can see we've got substantial liquidity in our equity, and we feel confident that our ATM will be more than supportive for all of these dividend obligations.
So either one, they're just assuming this, or two, they have big buyers, aka BlackRock, the government, that are telling them we're just going to keep buying, so don't worry, we will keep buying your stock. But in a bear market, they don't have the liquidity, right? When nobody's buying your stock, there's no liquidity to pay these dividends and pay all these things. And so he's not going to tell you that. He's not going to say, like, it would look really bad if Bitcoin went to $30,000, because he's pretty confident that they'll be all right. And he's pretty confident that Bitcoin's going to be all right. But we could stay at 30,000 for months. And just the fear alone, I think, could tank the stock. And I'm not saying forever, but this is the environment that we're in, right? The largest Bitcoin mining company in the United States is taking out debt to buy Bitcoin because they can't buy it themselves. They don't have a profitable business. If they did, they would be buying Bitcoin with their own money. And so with that, let me know what you guys think about this. Don't forget to give this video a free thumbs up. Hit the subscribe button. Consider becoming a channel member by clicking the subscribe plus button or join button down below. And I'll see you guys in the next video. Invest responsibly, do your own research, and as always, crypto on.